Welcome to my channel, Balance Sheets Matter. Today we're going to be looking at Skyworks Solutions and do a stock analysis on Skyworks Solutions. But first, make sure to subscribe to my channel, Balance Sheets Matter. I do individual stock analysis videos. So if you want to get an idea for good stocks to buy and potentially value traps to avoid, make sure to subscribe to my channel and hopefully it'll give you some ideas and insights. And if you do want me to cover a stock, please leave it in the comments below and I'll add it to my list and I'll try to cover it in the future. So now let's get on to the stock analysis. But first, let's look at some of the high level stuff here on Guru Focus. You can see they have their little Guru Focus span, which is kind of showing it could potentially be undervalued. Their current PE is just over 15, which is looking pretty attractive, and a forward PE of only 10.74. So far, this is looking good, but we need to see if this is actually going to make sense and isn't a value trap. Also, they have a dividend yield of 2.57% with a low payout ratio of only 0.38. So far, that's looking pretty good, and total market cap is just over 15 billion. So unlike a lot of other semiconductor companies that people are familiar with, like such as Intel, which makes chips, or Nvidia, Skyworks Solutions mainly focuses on Wi-Fi and wireless type of solutions, such as found in smartphones as the Apple phone or other headsets and other applications like that. As you can see with the revenue trend here, they do have a nice strong long-term growth revenue trend, but there is ups and downs. They have the ups, they have the downs, and it looks like based on analyst estimates, they are expected to grow their revenue in the future with a 10-year annualized growth rate of 13.4% per year. But as you can see, that volatility kicks in, as in the last year, the revenue did decline 5.3%, which also could be the reason why the stock has declined as well. So let's jump into the financials here. First of all, it's sometimes nice just to look at the return on invested capital against the weighted cost of capital. So as you can see, they've had very good return on invested capital. So whenever they're investing in actually like capital and assets in their company, they're getting very good returns on it. And for them, their weighted average cost of capital relatively low, sometimes lower than others. But the nice thing is, if they did have to take debt or issue shares, their weighted average cost of capital is quite significantly below the return on invested capital. So that's a very good sign. And then you can see here the revenue trend. They have over the long term grown the revenue quite aggressively, but they do get little periods of time where the revenue will decline or it will pause out for a few years. And it looks like that may be a current time we're entering, as there was this jump from 2020 where it was only 3.3 billion up to 5.4, and now in the last 12 months it's just under $5 billion. So that's not completely untypical with Skyworks Solutions, and this may be providing an opportunity to buy them cheap. And if we look at their gross margins, you can see that before in the past they used to be in the basically the low 40s, even the high 30s. They got it up to the around 50%, and they've declined a little bit back to around 46. So because historically they haven't had higher basically gross margins, I wouldn't count this as a huge negative quite yet. It is not a good sign when you have companies having a consistent long-term decrease in gross margin. So this is one thing we're going to have to watch to see if this keeps contracting or if it stabilizes. But right now, 46%, 45% could just be a realistic long-term gross margin for Skyworks Solution to achieve. And then you can basically see their selling and general admin relatively quite low. It actually increases slower than the pace of the actual company, and even research and development. Research and development more increases with the pace of revenue, but relatively to all the other expenses, it's even quite low, and they're still able to provide top quality products, and they have a lot of patents and other stuff around that. And that leaves them a pretty good operating margin right now of around 26%. And you can see how this kind of bounces around the past. It's been at the highs of 34, as low as in the high teens, such as 16 there. So we're kind of middle of the band right now. So there is a little bit of fluctuation that can happen based on all these expenses with Skyworks Solutions. But one thing I really like about them is their extremely low interest expense. Basically, they only have $66 million in the last year of interest expense. And this is in comparison to making $1.3 billion in operating income. So they're not going to have any trouble basically paying their debts. This is a very low ratio. I really like when I see this with companies, because I'm not always so happy when companies have a lot of debt, and rather than this top line basically operating income trickling down to the investor, I don't like it being paid away basically to interest expense. So Skyworks Solutions doing very well because investors getting more of that money. And then we can see on the bottom line, the net margin over the years basically has been increasing. They've been more or less in the mid-20s. They've kind of come down a little bit to the low 20s. This also could explain some of that stock pressure on their stock price. And overall, EPS, though, has been increasing over the years. This is a good sign. Again, though, they did have these big fluctuations up where they go from $4.84 to $9, and now they're $6.51, but that may look like a decrease from $9, but this is actually quite a strong increase if we look at it, if it was like $4.84 some years ago, or even $5 in some previous years. So where there is fluctuation, we do see this long-term EPS growth, and that's why when Skyworks Solution is going through a little bit of a rough patch where they do have a little bit, say, worse margins or a little bit lower EPS, this might be an opportunity to buy them. And another way they're returning capital to shareholders is they are repurchasing shares. As you can see from their shares outstanding, this has been going down over time, not at the quickest rate. Some companies buy back shares a lot more aggressive, but this is a good overall trend to see. Now let's take a look at the balance sheet. Basically, total current assets just sitting at about $3.1 billion. We got some cash and cash equivalents there of just over $700 million. Total receivables of $700 million again there, and you got inventories of about $800 total, and finished inventories of $300 for a total of $1.2. So it's a little bit all over, evenly scattered for their current assets. But nice thing is, current liabilities only $800 million. So basically, almost with all their cash, they could basically pay off all their current liabilities, and their overall current ratio is looking really good because they have multiple times more current assets than current liabilities. But let's look at their overall total assets. They're sitting at about $8.5 billion, just under that, but they do have $2.2 billion of goodwill, so we're going to need to factor this out. And total liabilities only just under $2.6 billion, and that leaves total equity of just under $5.9 billion. But remember, there is that $2.2 billion of goodwill, so we subtract that out, and I think we get about $3.7 billion in total equity. And remember their market cap, it's about $15 billion, and this company has basically over $3.5 billion in basically total equity in it. So a lot of the equity in the company is sitting in cash and real assets and real tangible things. If they basically got a little bit better cash flow from selling their current inventories, they could use that and do share buybacks, for example. Now let's take a look at the cash flow. Basically, on these semiconductor companies, such as I explained with Intel, you really do have to look at the cash flow from depreciation and compare that to the purchase of plant, property, and equipment. Since sometimes companies are not depreciating, they're not having to depreciate their assets at the rate they're having to replace them. But this does not appear to be the case with Skyworks Solutions. And this is one reason I like Skyworks Solutions, is that basically it looks like their actual cash flow from depreciation is actually fairly in line with their purchase of plant, property, and equipment. And actually in recent years, they've been depreciating more than they've been having to replace. So the numbers we're seeing from EPS on a real cash flow front, they actually have more cash flow dripping to that bottom line. There does seem to be some spotty acquisitions back in the past, with a really big one in 2021. And with all this equity they have, this may be basically opportunity they have in the future, since when you have a lot of equity, it's going to be easy for them to take debt at low interest rates and do those strategic acquisitions. So that's a nice factor about Skyworks Solutions there. So now let's see how they're returning equity to shareholders. As you can see, repurchase of stock, they've been picking it up more in the recent years. And then last year, almost $1 billion basically in share buybacks, but they are getting more and more share buybacks as time goes on compared to their infancy stages. And they also are starting to pay out dividends as well, becoming one of those more dividend stocks for those dividend investors. So I like this combination of dividends and repurchase of stock for a company like Skyworks Solutions to the investor. They're paying out a nice dividend, but they're also buying out a good amount of stock, which is going to actually help grow that dividend over time. As they buy back the shares, you're going to own more and more of the company. And then you can see basically free cash flow along the bottom line has been positive all years. It does fluctuate a little bit, but this is a good sign. They're not having negative free cash flow. And from their balance sheet and everything else, we wouldn't expect that either. So now let's take a look basically at the interactive chart to get an idea what a good price could be to basically pay for Skyworks Solutions. As I like to sometimes look at relative analysis for companies that have consistent histories. So let's bring up the price to sales ratio. I'll wait for that to load up. I'm going to put it on a little bit shorter time frame since this is going back to 1980, which we don't really need to see. Maybe a little bit shorter, 15 years here. I want to get over the 2000 there. So now you can see this basically nice price to sales ratio in green, and we are at the lower trend here, and you can see how much this overall tracks with the long-term stock price, that basically whenever the price to sales ratio is historically low, the stock price is also historically low. Another way you can check to basically see if the price to sales ratio is a good way to measure it is look at your net margins, because you want to see that the net margins have been consistent. And this is one thing that is true with Skyworks Solutions. We did already see that they have been actually increasing over time. So let's go on a little bit longer chart here. And you can see back here, they were in the mid to low teens, and now they've increased it into the 20s. So the price to sales ratio relative analysis is probably a pretty good way to value them from a historic perspective. They also have the low PE, the strong dividend yield, and the share buybacks. So overall, I do think Skyworks Solution is probably looking pretty attractive to buy right now, although they may not pop up in price until those sales really turn around. And we can see that from bringing up the revenue with estimate to basically see what the analysts are estimating. As you can see, there's been some contraction, but they are expecting it to tick back up in the future. And then let's go to the stock chart here. As you can see, I just have a little channel here to kind of get an idea of what the range Skyworks Solutions been trading in. And you can see in the 2000 bubble, way up overvalued, come back down to way undervalued. And now we're kind of in this middle of this big trend, but you can't really be expecting things to get all the way down here or all the way up here. But relatively for this mid-trend, it is a little bit lower. We are into some of those longer term monthly moving averages. So overall, from the risk reward, the fundamentals, I think Skyworks Solutions is a good buy. I currently own some Skyworks Solutions, although if things really go bad, you obviously could expect this to drop down here, but if things go well, you could expect it to go up here, which provides a lot more upside than downside. So I hope you like this stock analysis of Skyworks Solutions. Hopefully it gave you a few insights. If you liked the video, remember to hit that thumbs up button, subscribe to my channel, and I'll see you in the next video.